Did you know that in 2024, China became the epicenter of the electric vehicle revolution, with over 13 million new energy vehicles, NEVs, sold in the country? That's more than the entire global EV market combined. A market this size is almost impossible to ignore, which is why Polestar, the Swedish electric vehicle brand backed by Volvo and Geely, made it a cornerstone of their strategy. But despite China's dominance in EV sales, Polestar found itself struggling to make an impact. Only 3,100 Polestar cars were sold domestically in 2024, making up just 7% of their global sales. The question is, why did this ambitious, sleek brand hit the brakes in China? How did the world's biggest EV market slip through its fingers? Stick around till the end to uncover the twists and turns in this unexpected journey. This isn't just a story about a brand's failure, but a lesson in survival, adaptation, and global strategy. The dream: Polestar's bold vision for China. Polestar's vision for China was bold and ambitious. With China leading the world in electric vehicle sales, it was the perfect market to target. Polestar wasn't just looking to sell cars in China, they planned to build them there, making the country their primary manufacturing hub. By tapping into the rapidly growing demand for EVs, Polestar hoped to not only cater to the local market, but also use China as a base to export cars globally. Backed by Geely's financial muscle and Volvo's trusted reputation for safety, Polestar believed it had the right mix of innovation and credibility to succeed. The goal was clear: carve out a premium niche in China's crowded EV market. By producing cars locally and exporting them worldwide, Polestar saw China as the launchpad for its global expansion. With the right strategy and the world's largest EV market at their fingertips, Polestar seemed primed for success. But reality would prove to be far more complicated. The reality: struggles in China. Polestar's ambitious entry into China quickly collided with reality. The brand wasn't just facing competition, it was facing a bloodbath. Local EV makers were moving faster, innovating quicker, and offering more features at lower prices. Companies like BYD weren't just competing, they were dominating. These brands had home field advantage, offering cars packed with interactive screens, advanced voice controls, and a style that suited Chinese tastes. Polestar's sleek minimalist design, which worked well in the West, didn't have the same appeal in China. It was seen as too austere, too European, and frankly, not enough to stand out in a market filled with glitzy, feature-packed competitors. But it wasn't just about looks. Polestar's cars were often criticized for lacking rear passenger space, a deal-breaker in China, where buyers prioritize comfort. And then, there was the price. Positioned as a premium brand, Polestar's cars were far from cheap. But in a market where high-quality, feature-rich domestic EVs were available at a lower price, it was a hard sell. To make matters worse, Polestar was reportedly offering massive discounts, tens of thousands of dollars off to push unsold inventory out the door. It was clear: Polestar wasn't finding its place in the Chinese market. The financial toll: behind Polestar's sleek designs and ambitious promises, a harsh financial reality began to unfold. The brand wasn't just struggling to sell cars in China, it was losing significant amounts of money. Despite its premium image and high expectations, Polestar was bleeding cash. After an initial surge in stock price following a promising public offering, reality set in, and the company's stock began to tumble. Polestar had set an ambitious goal to become profitable by 2025. But with sales stagnating in China and pressure mounting from all sides, that target was starting to feel more like a distant dream. To survive, Polestar had to make difficult decisions. Continuing to pour money into an underperforming market was no longer feasible. The Chinese dream, once full of promise, was now turning into a financial drain. It was clear something had to change if the brand wanted to remain viable. Geely's shift, a new strategy. Polestar's struggles in China weren't just its own problem. The company's parent, Geely, had its eyes on the bigger picture. Geely owns a portfolio of brands, from Volvo to Lotus to Zeekr. As Polestar stumbled, Geely was pushing for a more streamlined, efficient approach. The solution came in the form of what's known as the Taizhou Declaration, an internal directive to reduce redundancies and improve synergies across its brands. Geopolitics and global strategy, a global pivot. And then, geopolitics added another layer of complexity. Rising tensions between the US and China brought about tariffs on Chinese-made goods, including EVs. For Polestar, which had been building nearly all of its cars in China for global export, this was a serious threat. The company's prices and profits were at risk in key markets like America and Europe. To survive, Polestar needed to rethink its strategy and fast. Scaling back in China. By 2025, Polestar's retreat from the Chinese market was in full swing. Two-thirds of its stylish showrooms, known as Polestar Spaces, closed their doors. The company also exited its key sales and marketing partnership in China and slashed its local staff. However, this wasn't the end of Polestar in China. The company remained committed to manufacturing its cars there, still using the country as a base for exports. A small team remained behind, handling essential after-sales services and keeping the door open for any future opportunities. Polestar's move wasn't about disappearing, it was a strategic retreat. Looking ahead, the global focus Polestar's new strategy was clear. Focus on Western markets like Europe and North America. The Polestar 3 and 4 SUVs, along with the upcoming Polestar 5 and 7 models, would be the brand's new vehicles to watch. This shift away from China was about playing to Polestar's strengths, where design, performance, and premium branding were better understood and appreciated. But will it be enough? Polestar's journey is a fascinating case study in adapting to fierce market competition, global pressures, and the relentless pace of technological advancement. What do you think? Can Polestar rise above its challenges and emerge as a global EV leader? If you found Polestar's journey interesting, make sure to like this video, share it with friends, and subscribe for more insights on the future of electric vehicles. Let us know your thoughts in the comments below.